What's going on? What's going on, guys? Back in here for another top of the week analysis here for the foreign exchange markets, indices. I'm gonna be checking out dollar as usual. Today is February 19th, 2024. Already almost the end of February, almost the end of the first quarter. And last week was absolutely beautiful, right? If you tuned in last week for the market outlook and you followed anything that I was looking at, then you already know, our accuracy is always it's always almost out of worldly. All right, so super grateful for a good week. I am going to be dropping a video this week because, well, not because, right? We need to be doing these videos anyways, but something that I'm actually diving into and a lot of people have been talking about is actually the futures market, right? It's a lot of interesting things going on right now in the foreign exchange market when it comes to MetaQuotes, right? Which is the company that owns MetaTrader 4 and MetaTrader 5, right? They're no longer essentially working with brokers and props that are offering their services to U.S. citizens, right? So pretty much it's making it a lot harder for United States citizens, which is a lot of us, right? A lot of us. It's actually making it harder for us to be able to trade utilizing MetaTrader and MetaTrader 5, MetaTrader 4 and 5. Now, here's the thing, okay? I can still trade and you can still trade MetaTrader 4, MetaTrader 5 as a U.S. citizen with a regulated broker, such as, there's a number of them, right? There's 9 of them, actually, to be specific, I believe. But the thing is that when you trade with these regulated brokers, you have a lot lower leverage, 1 to 50 leverage. And it just, it kind of gets weird. So I never really wanted to go that route. However, learning about futures is you are trading in a centralized space with a regulated broker, right? The entire futures market is regulated. So that means we can, if you trade a prop firm account, that's one thing. But when it comes to trading your own money, you can deposit and withdraw straight to your debit card. There's no spreads on, well, I'm not going to say no spreads. I believe the spreads are like 1 pip, 2 pips. And that stays the same. The spreads don't open up on you. They don't close on you. The markets are open 24 hours the same exact way, right? So I've been getting educated myself because I have a lot of people that are inside the U.S. market that we work with in the Traders Guild and just people that I know in general. And it's definitely been something that's annoying for me. I've basically only almost been able to pretty much trade my prop firm account since December, right? The props and doing the challenges. And anybody who knows me, I love trading my personal account, trading my live funds. So, it's been a little bit irritating with this whole situation, not knowing what brokers I could trust, what brokers I could work with. But it's, as traders, that's the nature of the game, right? It's being able to pivot, being able to learn, adapt, respond to the market. And so I've been looking at this futures thing. I've been saying, I don't have the time to learn something new, but ain't got no choice, right? This is what we do for a career. So it's really not that much different. It's really not different at all. So like I said, I'm going to do a video on that this week. For everybody in the guild, we're going to be updating the courses to include how to get started with futures, how to manage your money. So, if you like the sound of that, y'all let me know in the chat, let me know in the comments, and I'll definitely work on getting that done for y'all faster, okay? Another thing about futures is that I would definitely love to put a lot more money, into my trading accounts. A lot of times trading with unregulated brokers, never really feel comfortable putting, over $2,000-$3,000 inside those type of accounts. But going into futures now, knowing it's a completely regulated process, knowing that I can deposit and withdraw straight, with my debit card, bank account, whatever the case is, it's exciting to know, like, okay, boom, I might be comfortable putting 5,000, 10,000, inside of an account and trading that. And they also have prop firms, futures prop firms as well. So like I said, y'all stay tuned for that this week, and y'all let me know if that's something you're interested in, and we'll move faster to deliver that. All right, so let's go ahead and get into this week, right? Let's go ahead and get into this week in the markets. Now, all right, give me a second. We actually have to fix our screen share. Y'all seeing my calendar right there. Boom. All right, cool. So we outside. I was looking to take advantage here on AUDJPY. It wasn't really rocking with me too much, not gonna lie. So we're gonna keep it pushing. All right, so top of the week analysis. First thing I'm always gonna start off with is looking at the dollar on the higher time frame. Now, let's see. Economic calendar this week is looking a little light. It's looking a little bit dry. So I'm not gonna lie to you. That doesn't mean I don't expect movement in the markets. It just, whenever there's low liquidity events, a low amount of liquidity events, which is what I call the news liquidity events. Whenever there's a low amount of liquidity events, I kind of view it as an opportunity for low probability situations in the market. So just want to be aware of that. Tuesday, we do have Canadian CPI on Tuesday, but that's it. And then JPY, some news in the afternoon. No dollar news. Some speakers for pound early, late London session. Wednesday, again, no high impact news, except we have FOMC meeting minutes at 2 p.m. Meeting minutes just means the written version of what came out FOMC 2 weeks ago when they released the interest rates. All right. So that's all that's going to be on Wednesday. Finally, on Thursday, we will get initial jobless claims at 8:30 and a myriad of, euro and pound news during London, but nothing overly, impactful. But having this many medium impact news events during a London session, along with Euro CPI, late London, that's definitely something to pay attention to. Thursday London session may be sweet, as well as going into that Thursday New York session. We have news event at 8:30 a.m., high impact news event at 9:45, another high impact news event at 10 a.m. So this is another one of those weeks where we can expect to see weird market price action, or just the market setting up for the actual move, and we actually see delivery on Wednesday or Thursday, right after that meeting minutes, going into this high impact news events. Very high chance that Thursday is going to be the sauciest trading day of the week. And then Friday morning, we do have German GDP. I do enjoy to trade Friday London session because tend to be able to catch some good end of the week opportunities. So as long as, I haven't hit my max drawdown or my goal for the week, right? But that is the week coming up. Definitely, like I said, just keep in mind that it may not be the most volatile until Thursday, but there could be plenty of opportunities, right? So we're going to go ahead and dive into our charts now. Boom. All right, cool. So let's go ahead and head over to my higher time frame DXY chart. All right. So last week, we were paying attention to where the weekly candle is at. We have last week's candle is this candle. Now, ahead of last week, our anticipation, right? This was last week here. This was us going into last week. This is how the markets were looking. And our anticipation for last week here was to see price run the lows of last week or down into the, to that area, and then to see price expand higher, right? Going for these highs of the week before, that first week of February. The highs of December had already been ran here that first week of February, but we wanted to, see that one more time get ran and see price trade into this heavy black line here, which is a weekly order block. All right. That was our anticipation on price last week. If we go down to the 4-hour, we can kind of let it play out a bit. So boom, first thing on Monday, we did see price go ahead and run out that sell side liquidity, right? Literally right after our market outlook. Okay, so we had market outlook Monday. Oh no, this was early Monday. So that night after it, we had already seen this happen. We were looking to see price not trade down below this candle from that run below sell side liquidity, right? That's what we, anticipated going into after showing up here on Market Outlook last week. And, as we'll see, price did manipulate past that, right? So we were live trading. Was it CPI we had last week? Let me double check. It was CPI last week. Tuesday, we had CPI. Bang, right? So I didn't want to see this get ran, but with something like CPI, we can't do anything but stay ready. And we have, if you're part of the guild, we have the recording from how we traded this live. And it was nice, right? So we saw price form right above that order block here on the 1 hour, and then CPI dropped, and of course this nasty drop happened. But we wait until the CPI happens, right? So once we saw this drop and we saw price come back up above this level, that had me still confident in the validation of this order block and our destination to the highs. And as you can see, literally within the same hour, price ran out those lows, respected the order block on a closing basis, right? We closed right on the top of that order block, and that next 9 a.m. candle opened, that next 8 a.m. candle, well, on a lower time frame, it'll be more like 8:31 candle, opened up right on top of it, and took us straight up to those highs and to that Wednesday, that last week order block, right? High, like I told you, high accuracy from what we were looking at last week. And not too long after we saw price go ahead and hit that weekly order block, we started to see them break down to the downside, right? So now, at this point in last week, our high time frame objective had been hit, which was seeing price get to that 104.71. This higher time frame, this higher time frame objective. Whenever price gets to a higher time frame objective, we either expect weird, consolidation, or we expect for price to begin to show price action in the opposite direction. All right, so we reached that higher time frame objective, and as you can see, price started to go ahead and sell off pretty aggressively from that level. So, we were pretty on track. Let's go ahead and finish out the week. And so, boom, and let me mark out this week, which is going to be here. Boom. All right, cool. So, yeah, last week we hit that higher time frame objective. They ran that high from hitting that objective one more time that Wednesday morning. We started getting breakdowns on price, and we saw them recover all of this imbalance from CPI. All right. So now that they've recovered all of this imbalance from CPI, it's nice to see them respecting this last. We can delete this for now. We can delete this. We can clean this up. All right. It's nice to see them respecting this, right? Price action right here, these last few down candles, and then we saw price take off. It's nice to see they traded back to that level, respected it, came back higher, right? And now they're just playing on this level. Now, the thing is that given that the higher time frame objective of this weekly order block was reached, I am bearish at this very moment. I'm not expecting to see price just continue. We are at a premium, all right. We're at a premium of the last quarter of last year, right? That fourth quarter, we're in a premium of the fourth quarter. We're trading above, December's price action. I mean, we're at a premium of last year as a whole, right? That's the high to low of last year. We're at a premium of last year. So I do want to see from this weekly order block, I do want to see us get back down to this daily imbalance here. Before seeing price actually trade higher, right? Because that would bring us down into the discount of last year, right? From a higher time frame key level, it would bring us down to the discount of that last quarter. You understand? And so, and even just looking at this year so far, right? This year so far has been this price action, right? And even just this year's price action, this would be a discount of just the past month. and 19 days, right? So that's a sweet key level. Now, if price just, throws a big, finger up to me, and lets me know that my higher time frame bias is incorrect, it's okay. I'm gonna adapt. This higher time, when we go over my higher time frame bias, this is not what I take trades based off of, but this is how this is how I know what entries that I'm going to look for. And when it comes to my entries the day of, if my entries get invalidated, either I take an entry, or if my parameters to take a trade are invalidated more than once, more than twice, I mean, at that point, I have to start to realize maybe I'm on the wrong side of price, or my timing is off, right? And if my timing is off, it's the same thing as being off side of price, right? As an intraday trader, if my timing is off for the buy, naturally, that means that maybe I should be actually looking for sell opportunities, even sell opportunities towards my buy opportunity, right? So, this is just, as of right now, until price starts to actually, we get into the markets tomorrow, Tuesday, I do want to go ahead and see price get down into this level here. So that's my thoughts, higher time frame on DXY. And seeing just looking at the way that this week so far has opened up. Anybody who's gone through the mini course knows, if I'm expecting bearishness on the week, if I'm expecting bearishness on the week, then first I would want to find opportunities when price is trading above the open of the current week that we're on, right? So just, looking at, how price opened up, dropped down a bit, and now we're trading above the weekly open. Going into, tomorrow's price action, today, I'm going to be looking for potential turnarounds, right? Potential levels of premium on a lower time frame for us to sell from, right? Like, for example, we have this imbalance here, which was also an imbalance in the past, right here. Was an imbalance, then it dropped back down, gave us a sell side imbalance. This now is a balanced price range. So that's an example of an area that I could pay attention to. But again, it's not just about the price action. It's very, very much about the timing. So we're going to go ahead and like I said, we don't have any news events, right, to really pay attention to or anticipate going into tomorrow's price action. For real, when it comes to the dollar at 10 a.m., I mean, we could hope to see, but I haven't seen the U.S. leading index affect my trading too much over the last 5 years of experience. All right. So I'm not really expecting that much of excitement from that specific news release. Right. But with that being said, I'm going to be having a heavy emphasis on indices going into this week and the next few weeks, because again, I am switching to focus, learning futures, right? I'm not going to just straight out say I'm switching, because I am still trading Forex this week. And not just Forex, but I'm still using the Forex prop firms. But I am starting the futures journey, and I can trade currencies on futures. You can trade currencies on futures. However, it's just, it's more widely, I guess, people talk about the indices. So it's like, look, I already trade indices. Let me just take advantage. You feel me? So I'm just learning one thing at a time. I'm going to have to learn how to count pips, contracts, and stuff like that on each Forex pair. So I'm just keeping it simple right now, learning the indexes. All right. But for those of y'all that know, we body these indexes. That's not anything new. The indexes love us, especially NASDAQ. NASDAQ is my preferred indice to trade. And then US 30 on the back end whenever NASDAQ is acting up. And as we said last week, these indices are extremely bullish. All right. That's the type of price action we're getting. We love to utilize the T-bond futures as our kind of indicator when it comes to the direction and the flow, the flow of price action, institutional order flow when it comes to indices, right? Now, we already have been looking when it came to the bonds market. Typically, indices have a positive correlation with the bonds market. So that means right now, me looking at ZB1, if ZB1 is bullish, typically we're going to see bullish price action in indices. And typically, when it's bearish, we're going to see bearish price action in indices. And whenever they're going opposite directions of each other, we can typically expect a reversal in the current market trend. All right. So right now, clearly, over this last few weeks, since the year started is what I'm going at, right? This line here represents the beginning of this year. Ever since the beginning of this year, this market has been bearish. All right. Now, because of that, overall for the year, I almost anticipate bullishness, but we're going to see. All right. First, I've been wanting to see price get back down to this monthly fair value gap, as you can see, and she's been doing that pretty well, right? Dropping down to this monthly or fair value gap. This month of February has just been straight bearishness. But as you see, we're on track for that. Now, once we hit that fair value gap, I'm expecting very rapid price action to the upside on these bonds and these futures. Okay, so as you can see, we have a little bit further to go on the lower time frame until we reach that level. You know, even interesting enough is right at the high of that level is the low of December, right? That's the lowest price of December here. As you can see, this candle here is December 1st, and it's the first candle and the lowest candle of December, right? So for anybody who trades, you know, the way I trade, the lows of a week, the lows of a month, especially lows of a month are going to be key. Lows of a week, lows of a specific day, lows of a specific trading session. And at this very moment, we're paying attention to the fact that this here area is a monthly range that needs to be balanced, and it's also the low of a month. Okay, so I like to consider this a area with a magnet on it, right? And so that's where I'm kind of looking to see price get to. So that means going into this week, guess what? I continue to expect bearishness on this asset. Okay. Now the other way that this is utilized is that typically it goes the opposite direction of the dollar. So given that bonds hasn't yet reached its objective, I may be a little bit hesitant on believing that DXY is fully ready to just drop, but they don't have to fully depend on each other. But these are just hints that I pay attention to in price action, so that if anything starts to go against me, I can be aware as to the likelihood of, you know, something different happening than what I expect, or the likelihood of what I expect to happen actually happening. All right. So that's what we have in focus right now when it comes to the bonds market. And you'll notice that since this, boom, here, let's go, boom. This is the beginning of this year here on US 30. And you'll notice that price traded a bit higher. But ever since this month here of February, price has really just been consolidating here on US 30, right? A lot of back and forth here. Same thing on NASDAQ, right? Here's the beginning of this month, right? And you can see ever since this month, we've just been getting a lot of back and forth. Now, clearly indices, again, are at all-time highs, are on a bullish trend, but clearly with the bonds market pulling back and DXY with so much strength, you're seeing the indices consolidate. Now, what's very interesting that I like to pay attention to is that given that the bonds market is so bearish right now and the dollar is so bullish and the indices are still just consolidating, they're not really selling off, they're just consolidating, and they're not the most bullish. I mean, those are signs that once bonds reaches that higher time frame level that I've been looking at and that we've been looking for it to get to, and we start to see bullishness on that market, once we start to see true bearishness coming through on DXY again, that's gonna really open up the indices to just fly. Okay, and we can tell that there's a lot of bullish volume and a lot of bullish strength here in indices, because even though everything inverse to them is going down and they should maybe be falling a lot harder, they're just consolidating, right? Which means even though there's a lot of selling pressure, a lot of bears coming into the market, the bulls are still very strong, right? So that's one thing that we 100% want to be paying attention to when it comes to indices. So that's the reason that as much as there may be bearish as much as there may be bearish opportunities, unless we're in, higher time frame premiums, like we took a sell on NASDAQ last week. That's something that I go over on the live sessions. But for the most part, you're going to enjoy taking buys more in this type of a bullish market until we actually start to see bearish breakdowns, right? Like maybe start to see price trading below the open of February, or getting to trading below the low of February. And the open of February was here, right? That was the open of this month. Okay. Or if we start to see price actually break down below a level like this and closing below those levels. You can see over here in the past, we had a very similar level to the one I just pointed out. This was a higher low, and we saw price trade up, create a higher high, came down as if it was breaking. Even here, you would have been looking at it as if it was breaking structure, but you see price closed above the lows. And then we got bullish price action again. This is the type of price action that'll just piss you off if you keep trying to catch the other side, right? If you're a beginner, you're really better off just waiting until price is in these discount levels, right? Where it's retraced back to a higher low of some sort, or is sweeping lows, and looking for the potential buy opportunity, even if it's just a scalp. Better off in that way. So same thing here, right? We could see price this week just really trade back down to this level, even dig below it, but ended up closing above. And still, what is that? A potential, continued buy opportunity. However, if we do see price get down below, close down below these levels, and start to trade back up to an area like this, we maybe could anticipate seeing price trade back down to that open of February, right? So that's what I'm going to be paying attention to here on indices this week. Potentially reverse, right? Not reverse, but we can potentially see price action fall down, right? Give us a pullback where it's already starting to look like it wants to. But like I said, so far this month, we've really just been consolidating. We do have this gap here from the open of the month right here. And that's what I was saying, right? We can target seeing price get back to these areas from when the month opened. So that's something that we can pay attention to. We also have areas of imbalance here that we could pay attention to so far on this year. That would be a good area of discount for us to get into, right? Because out of this low, this is the lowest point of the year. This was the highest point of the year. And that is the 50%. Right. So anything under a 50% off on a price that you're willing to pay is a discount. You feel me? So that would be a good area of discount. And from where price is, that would be potential. We could find selling objectives until we get to an area like that. However, again, unless I see breaks of structure, closes below breaks of structure, and at the right time see liquidity sweeps on buy side liquidity, I won't be looking too much for the sell opportunities. But again, being intraday traders, scalpers, all we can do is really truly adjust to the markets. All right, so that's what I'm going to be looking for as far as this week goes, focusing on DXY and just giving you my thoughts. Same thing I said on NASDAQ is my thoughts on US 30 as well. The other thing we can take a look at is my darling gold before we hop off here. Now, I haven't really, anybody who knows, I started off trading gold in my trading career back in 2000. Well, started Forex 2018 to 2020, but when I actually got serious and, started being profitable, it was gold in 2020. And the thing is that I've gotten to the point now where I realize I don't want to trade gold all the time. I want to trade gold at specific times, because gold is one of those pairs that when it goes, it really, really goes. It's one of those types of assets. However, the thing about it is that it don't always go. There's sometimes where it's just, the risk to reward on the opportunities, because it's not in a position of expansion, the risk to reward on opportunities is not always worth it, right? Sometimes I got to place my stop loss too far to be safe. For a profit target that's also the same distance, making it a 1-to-1 trade, or not a good risk to reward. So I don't always trade gold, and it's just been in one of those weird areas right now where it hasn't had my fullest attention. All right, now just looking at this year, we recently saw gold trade below the lows of January and the lows of this year in general. Okay, so that is definitely a key area for us to pay attention to. And then being here on this weekly time frame, we do have this last down candle here, before price traded higher, that has already been respected before, and we've just came back down to this level here on the lower time frames. All right, so we can be aware, especially if we start to get those breakdowns on the dollar. Okay, what I would pay attention to here on gold is on this daily time frame. If we see price close above this high here from last week's Monday, right? This was this was from last week Tuesday. If we see price close above this open here, all right, that leaves this as a strong order block, right? Boom. Okay, like clearly this is the last down candle, and I mean even that candle got respected with this one, but it's kind of small. I would definitely be paying attention to this range, especially after seeing us trade below the lows of the year into a weekly order block, right? In a discount of the year, right? This is the highest point of this year. This is the lowest point. We're at the most discount we can get of that. And then if we, just for kicks and giggles, let's see, from January. All right, so good old price range. Yeah, I'm just looking at that last 30 days, last 60 days of price action. I mean, just from all of this price action, you see gold's really just been back and forth in this area. And yet again, here we are at a discount. All right, for the most part, like as you can see, yes, gold's been moving a lot of pips. All right, we went from 1986 all the way to 2096 multiple times. Right, it's almost over 2,000, 3,000 points worth of price action here. But at the end of the day, we're just going back and forth. So the most that I can really bet on here is that we just took, this low. We just came into this higher time frame key level, and we're starting to see price expand. So this week, if I see gold giving a close above here, then I'll be looking for a potential opportunity from here to take us back above these highs here of not only February, but the highs of the year so far, if I'm not mistaken. Yeah, right, taking us up above these highs of the year. All right, so that's what I'll be paying attention to when it comes to Lady Goldilocks. Yeah, that's the only play that I would really want to take advantage of with gold. So that's my thoughts for today. For any of you guys, that we're going to be on the live session tomorrow. I'm going to be going live trading the indices. So we're going to go live tomorrow, or gold, right? If we see that same setup on gold. So we're going to be going live tomorrow, and really it's already going to be some weak price action, depending on how stuff sets up. And I'll let you guys know in the chat ahead of 8:30, ahead of this CAD CPI. If it looks like it might be something good, then I'll drop in the chat, let you guys know we're going to go live earlier. But for the most part, I'm planning to go live at 9:20. All right, 9:20 a.m. Eastern tomorrow, ahead of indices open at 9:30. So see you guys tomorrow morning. For anybody that's part of the guild, for anybody who's looking to be a part of the guild, you click the link, go to our website, and you guys can go ahead and get access. And I'll see you guys again next week, Monday, 9 p.m. Eastern, for another market outlook. And like I said, leave a chat, leave a comment. Let me know if you guys want that video on futures, and I'll go ahead and push it out a lot faster. And make sure you hit that subscribe button. All right. Appreciate you guys. Peace, 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 and love, y'all.